hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Wednesday morning and the cues coming out of global markets aren't all that encouraging, but the GIFT Nifty is hinting at a start above that, 19,500 mark or thereabouts. Lots of stocks to watch out for. LTIMindtree to officially enter the Nifty 50 club. You have Bandhan Bank because the CFO has resigned, and of course a whole host of stocks to watch out for. So we'll be talking about all those, and we'll of course be getting all your stock related queries addressed by our technical expert on the show. So of course, if you have any queries, send them in to us and we will take note of them. But of course, before we do all that, let's take a look at the top headlines at this hour. US futures edged lower even as Wall Street was shut on account of Independence Day last night. Asian markets trade largely lower, while the GIFT Nifty, as I mentioned, is indicating at a higher start for the Indian market. LTIMindtree makes its way into Nifty 50 as a replacement for HDFC. Now, HDFC will be excluded from the benchmark index on account of its merger with HDFC Bank. The changes will, of course, be coming into effect from the 13th of July. Among other stocks in news, the spotlight today will be on Suzlon's board that will be meeting on the 7th of July to consider a fundraise. Samvardhana Motherson announces the acquisition of 81% stake in Honda subsidiary. And of course, Bandhan Bank CFO has resigned from his post. So all those stocks in news today. And Bajaj Triumph's 400cc motorcycles will be launched in India today. Reports suggest that the two-wheeler maker may keep the price of these bikes below 3 lakh rupees to make it accessible to a wider range of customers. Well, without any delay then, let's bring on board our technical expert for today. Nilesh Jain of Centrum Broking is joining in this morning. Good morning, Nilesh. Good to have you on the show. Well, of course, the kind of rally that we have seen on the Nifty has been nothing short of breathtaking. But would you say that there is some bit of fatigue setting in on the charts at this juncture, or do you think the Nifty will manage to make a dash at that 19,500 mark as being indicated by the GIFT Nifty?
Very good morning to you, Nandita. In the last 6 consecutive sessions, we have seen a one-way rally and a positive momentum has continued. After rallying for the 6 consecutive sessions, yesterday we have seen a formation of a doji look-like candlestick formation on daily time frame chart. Basically, that candle indicates that indecisiveness among the participants. And from the high levels, we have seen some amount of profit booking. But the important part is that in the first hour of the trade, we saw some decline yesterday, and that was bought into. 19,300 in the spot level acts as a crucial support zone. And even if you look at the derivative data as well, the put writers have shifted their position towards 19,300. So 19,300 is the immediate and a crucial support from this weekly expiry point of view, whereas the upside is very much open for 90,500. So that could be 200-point trading range for the Nifty index. The overall bias is still very much buy on decline sort of market. And at current level, although the risk and reward is not that much promising, but the major structure continues to remain on a positive side. Even if you look at the Bank Nifty, it is sustaining well above 45,000 mark yesterday. Similar to the Nifty, it has also formed a doji candle on a daily time frame chart. So these candles, after a rally of last 5-6 sessions, is basically indicating some sort of a pause in the trend. And once this consolidation gets over, we can expect another leg on the higher side.
All right, once consolidation gets over, we can expect more upside on the Nifty. Hold that thought, Nilesh. We'll come back to you and speak about specific stocks. But also, let me also bring on board Vijayakumar, who's the Chief Investment Strategist at Geojit Financial Services. Good morning, Mr. Vijayakumar. Good to have you on the show. First of all, before I get into sectors, I want to discuss, what do you make of this recent rally? Do you think it's time to take some profits off the table, or would you advise investors to stay put and, ride the rally as the Nifty heads higher from here?
Good morning, Nandita. Glad to be here. We had this 700-point rally in Nifty during the last 5 trading sessions. This is, of course, a ferocious rally, but I won't call this a bull market yet, because a bull market needs 2 conditions. Number one, the valuations have to be attractive. At least the valuations have to be fair. And second, the prospects for economic growth and earnings growth should be very good. Now, the valuations are not fair from the short-term perspective. From the long-term perspective, you can argue that valuations are fair. But then Nifty is now trading at around 20 times 1-year forward earnings, FY24 earnings. And 20p is certainly not very attractive valuations. Therefore, the present valuations do not permit an unabated rally, taking the index much beyond 19,600 levels. I don't see the Nifty going beyond that, but then, of course, the markets have an uncanny ability to prove everyone wrong. Yes, investors have to remain invested in the market. That is how you make money, because it is impossible to time the market. But then short-term traders, maybe it is time to book some profits. I am more a fundamental person looking at the long-term wealth creation, not at the short-term entries and.
Sure, but that's a contrarian view coming in from you there, Mr. Vijayakumar. That it's not yet a bull market, because a lot of market participants are actually calling it, the mother of all bull runs. But of course, that's a contrarian view coming in. But let me talk about the PSU banking pack. Of course, over the last 3 to 4 sessions, the PSU bank index has rallied, and how stocks like Bank of Baroda, Canara Bank, all these counters have been buzzing in trade. Do you think, but what is it that could stall this rally going forward, given the fact that there are concerns about margins when it comes to some of these banks, as they reprice their deposits? Of course, there is the expected credit loss provisioning norms also that the RBI has, of course, mandated banks to look at. So do you think these two factors could be a dampener when it comes to earnings in the first quarter of FY24?
Well, margin pressure will be there, not immediately, but maybe after a couple of quarters, because deposit rates are being raised. So margin pressure is likely to be there. But we have to understand that PSU banks are even now attractively valued. I refer to the market as, not attractively valued. Valuations are very rich, but within the market, financials even now, particularly the leading banking names, particularly in the private sector, they are, if you look at their historical valuations, even now they're trading at below their historical valuations. But compared to the private peers, PSU banks are even now attractively valued. We must understand that there has been a dramatic turnaround in the fortunes of the PSU banks. PSU banks as a whole, the combined PSU banks, incurred a loss of 85,300 crores in FY18. Thanks to the asset quality review implemented by Raghuram Rajan, the then RBI governor. But from that loss of 85,300 crores in FY18, last financial year, FY23, the PSU banks have made a profit of 1,12,000 crores. So this is a dramatic turnaround. So even now, if you look at the valuations of PSU banks, they are, I would say, even attractively valued. When banks like HDFC Bank, ICICI, Kotak Bank, etc., trading at more than around 19, 20, and even 24. For Kotak Mahindra Bank, the valuation is PE multiple is 24, whereas the SBI Bank is available at a PE of around 9.7. And Bank of Baroda, I think it is around 6.7, less than 7. And Canara Bank is available at 5 times PE. Therefore, from the valuation perspective, PSU banks have more room on the upside.
All right, more room on the upside when it comes to valuation of PSU banks. Let me also get in, your thoughts on the two-wheeler space, given the fact, there has been a pricing war brewing in the premium bike segment. Yesterday we saw the Hero Harley launch, and that did put pressure on Eicher Motors, given the fact that, there are risks of a market share loss. And today, Bajaj Triumph will be rolling out its, 400cc bikes in India. And of course, they will also be pricing it around that 2 to 3 lakh mark, So, given the fact that Hero actually has been an underperformer when it comes to its peers, do you think now Hero has a chance to play catch up, and perhaps Eicher Motors could, emerge as a, laggard, given the fact that there are risks surrounding its market share, because that was one player which was dominant in the premium bike segment. What is your outlook on the entire two-wheeler space? We have some queries on our live feed as well, where Rupak Mehta wants to know whether actually Eicher or TVS is looking more attractive compared to Hero Moto now. What is your call on this?
I agree with your view that there is going to be hefty competition and some margin pressure also on the premium segment going forward. But if you look at the results, the June sales figures from the two-wheeler industry, it is very clear that the mass market is facing a demand problem. Hero Motors, for instance, reported a 9.9% decline in sales year-on-year 9.9% decline in sales is a big dip. So that means there is a demand problem in the mass production, mass market segment. But in the premium segment, it is a totally different story. We know that the recovery in India, even though the economic recovery is good, it is still a K-shaped recovery. And that is why the premium segment, whether it is in two-wheelers or in SUVs or in hotels, it is a premium segment that is doing well. And if you look at the sales figures of Eicher Motors, the June sales figure, it is up 26%. So the competition, of course, competition will heat up, and the affordable segment, particularly in the premium segment. The premium segment itself, there is an affordable segment, and that will witness some heated competition, which might impact margins. But then we must understand that Royal Enfield is selling in US. US is the land of Harley Davidson. And these are some very interesting developments happening in the Indian economy now. Royal Enfield is selling in the land of Harley Davidson, and India is exporting whiskey to Scotland. Therefore, Eicher Motors, in spite of this looming competition, is globally competitive. It is globally competitive, and it will continue to do well.
All right. My last question to you, aside of autos and banks, any pockets that you would look at for, wealth creation purpose for long-term investors? Which is that sector that is looking good for that purpose now?
For long-term wealth creation, a segment which is looking good now is capital goods, because there are clear signs of capex in the economy. Perhaps it will gather momentum going forward. A very important macro indicator of capex is the capacity utilization in manufacturing. Capacity utilization in manufacturing, once it crosses 74 levels, that is an indication of imminent capex. And also the order inflows for companies like Larsen & Toubro indicate that capex is happening. And in this capex cycle, what happens is, once the cycle begins, it will be there for at least 4 to 5 years. So we are at the cusp of a cycle in capex, and this means good news for the capital goods segment. So we are very positive on this segment.
All right, capital goods segment looking good for wealth creation purposes. With that, Mr. Vijayakumar, thanks a lot for taking out time and joining in this morning. Appreciate having this chat with you this morning.
Thank you. Thank you.
Well, with that, let's go back to Nilesh and talk about some specific stocks. The stock of the day for me today would be Bandhan Bank, given the fact that, Q1 loans and advances have grown 6.5% on a YOY basis, but on a quarter-on-quarter basis, it is down somewhere around 5.5%. Deposits are also up 17% or thereabouts on a YOY basis. But the bigger news is that the CFO, Sunil Samdani, has resigned. Now, if you look at the stock, Nilesh, it's not been doing all that well, down somewhere around 3% over the last 5 sessions. On a 6-month basis also, it hasn't really done all that well. How should one look at a Bandhan Bank? We spoke about other banks like PSU banks doing extremely well at this juncture, but this is one stock that has not really been picking up.
Absolutely, Nandita. If you look at last 2-3 years, this stock has been in a downtrend, and we have seen a lot of underperformance from this particular counter. On the weekly time frame chart, it is trading in a channel. Recently, it has tested the upper end of the channel, which is placed near about 270. And from the high levels, we have witnessed a formation of a low top and low bottom. So clearly, we have witnessed some distribution at the high level. The structure looks slightly on a negative side. We can expect further downtrend to continue towards 225 to 220 on immediate basis. From position point of view, I think going forward, it may test the levels of 210 to 200 on the lower side. So overall, it is better to stay away from this particular counter for the time being till the time we see any reversal in the trend. As of now, the trend looks slightly on a weaker side. As long as it trades below 250, I think it's better to avoid taking any contraband.
All right, better to avoid this counter at this juncture. Let's also shift focus to the brokerage call of the day. It's on Samvardhana Motherson after it has acquired an 81% stake in a Honda arm called Yachio, and it's the four-wheeler business actually. If you look at the brokerage call on this stock, CLSA has a buy call at the target price of 102 rupees. Acquisition gives a company entry into a new product segment of sunroofs and fuel tanks, and it helps the company grow its business with Honda Motors. In fact, Honda could now become the fourth largest customer of the company following this acquisition. That's the view coming in from CLSA. Nomura, on the other hand, has upgraded the stock to buy with a target price of 105 rupees per share. It believes that the acquisition has been done at attractive valuations, and any upside could only come from the ability to add new customers across Japan, US, as well as EU. But Citi has a sell call on the stock with a target price of 65 rupees a share, and the acquisition is actually more significant in comparison with the Prism acquisition that the company had made. In fact, Citi also says that the acquisition will complement Motherson's existing portfolio. We have some queries also coming in on the stock where Prabhu wants to know the long-term view. How would you play this stock now? Do you think this comes as a big positive for the company, and one should play for some more gains going forward?
I think it's too early to comment on that, because if you look at in last 1 year, this particular counter has stuck in the range. The range is clearly defined. 91, 92 levels on the higher side is acting as a major resistance zone, whereas we have seen a double bottom formation near about 61 to 62 sort of levels. So there is a rectangle formation shaping up. If at all we see any decisive breakout above 92, that would be a good sign, and we might see a follow-up buying towards 105 to 110 as well. But for that, we need to wait and watch out for the breakout above 92 levels. So that's the immediate resistance. And on the lower side, the immediate support that now comes around 78. So 78 should be the stop loss for the long position. And I would rather wait for a decisive breakout above 92 to get into this particular counter for the upside target of 105 to 110.
All right, that's the view then on Samvardhana Motherson. But let's also talk about LTIMindtree. Of course, it will be entering Nifty from the 13th of July after HDFC delists. The stock had run up quite a bit in anticipation of that. It was widely expected. So do you think that the upside has already played out in the stock? And we also have some queries coming in from Debu K on this particular stock, and a couple of more queries as well. How would you advise investors to stay put, or maybe accumulate on dips, or or how would you play this one?
Well, Nandita, there are two ways to look at it. First of all, this particular inclusion, which was very much expected, and we have already seen that particular move in the prices. So that news has already been discounted, and we have already witnessed a good up move in last couple of weeks. But if you look at the overall Nifty mid-cap IT space, that is looking slightly on a positive side. We have seen a strong reversal in the trend. So looking at that kind of trend, I think the further momentum we might see in this particular counter as well towards 5,500 to 5,800. A little bit from a position point of view. At current level, purely from trading point of view, I think if somebody is already holding the long position, can stay put for the upside target of 5,350 to 5,500. The stop loss for all the long positions should be placed near about 4,900.
All right, that's the view on LTIMindtree. Since we're talking about mid-cap IT, let's also talk about large-cap IT. We have a couple of queries on TCS as well as Wipro. Sharvan Bhati wants to know your thoughts on TCS, and Hemant Kumar wants to know what to do with the Wipro right now. Of course, the view on the IT stocks has been pretty divided. Some believe that, given the kind of valuations they have, it's the right time to buy. Others believe that there is, there are more chances of, more correction going forward, given the fact that the first half is expected to be fairly weak when it comes to earnings. What is your view? Do you think TCS, Wipro warrant a buy, at current levels? Because IT stocks last week, I think, staged a very smart comeback. So how should one play these large cap IT names now?
Well, Nandita, again, I would say if somebody is looking purely from a trading point of view, I think it's a good time to get into this particular counter, specifically from the large cap space. In the mid cap and small cap, we have already witnessed a smart recovery and smart rally, but large cap are still underperforming. But purely from trading point of view, I think it's a good time. The risk and reward looks positive. We can expect a momentum to continue since the overall Nifty IT space has been in the oversold territory. So looking at the structure of the TCS and Wipro, both are looking positive for the upside momentum to continue. Whereas TCS has the upside move towards 3,350 to 3,400 sort of target on the higher side, and then keep a stop loss below 3,250. Whereas Wipro still has the upside potential to move towards 410 to 420, and can keep a stop loss below 385. So out of these two, Wipro is looking slightly quite promising compared to these two counters. Overall, if you talk about the Nifty IT index, the major trend is still on the weaker side. So I don't see any major upside in the near term, but yes, from trading point of view, it can be bought.
All right, that's the view on IT stocks. Then, we have an interesting query on our feed. This one is from Rupak Mehta. Wants to know if it's a good time to enter either Titan or Asian Paints for the medium to long term. He wants to pick one stock between the two. If you look at Titan, it has hit a fresh 52-week high yesterday itself. And Asian Paints, I think, hasn't really done all that much in the last week. It's pretty much flat. And over the last 1 month, it has gained somewhere around 5% or thereabouts. What would you advise him to pick at this juncture?
Structure-wise, both the counter looks positive. Titan is looking more positive, but given the fact that you have already mentioned, we have seen a huge amount of run-up in last couple of months. Now, at current level, the risk and reward is not that promising. I would rather suggest to buy in a staggered manner. If somebody has a positional view of more than 1 year, I think it's a good time to add into this counter on declines, not buying at the high levels. So on the upside, the Titan has a potential to move towards 3,300 to 3,500.
All right, there seems to be some bit of a technical glitch with Nilesh's feed. We'll get him back on the show. But let me also talk about some of the other stocks that will be in focus today. All right, I think Nilesh is back. Nilesh, I want to, first of all, would you like to complete your answer for the last query?
Sure. So I was saying Titan is looking slightly overbought, so it is better to wait for some decline. Whereas Asian Paint, yes, this particular stock has a potential to move towards 3,500. So from that point of view, it can be bought at current level and on decline. Both the counters are technically looking positive from a positional point of view.
All right. I want to get in your thoughts on Suzlon also, Nilesh. That stock, of course, has been on fire. It was perched at a 5-year high. Now, there is a bit of news flow that the company's board will be considering fundraise on the 7th. How should one play? Should one buy into this? More upside going forward?
The news has already been partially discounted in this counter. It is already up 19% in last 2 trading sessions. So at current level, it is not advisable to go long, given the fact that the kind of run-up that we have seen in last 6-7 consecutive sessions from 13 to it has reached the 18 levels. So the risk and reward is not favorable for the fresh long position. For fresh entry, I would rather suggest to wait for some decline towards 16 to 15. The upside is still very much open for the target price of 20 to 22. So it has a potential to move towards 22 levels as well. But purely from trading point of view, it is not advisable to buy at current level. Those who are already holding the long position can continue to stay put, keeping stop loss below 16.
All right. I think we just have time for one more query on the show. This one is on IDFC First Bank, and it's coming in from G. Manjunath. Wants to know what is the target for IDFC First Bank in the next 2 years. Of course, IDFC and IDFC First Bank are following in the footsteps of HDFC twins. Boards have given the nod for a merger, which of course the street believes is more in favor of IDFC, which is why we saw IDFC First Bank take a sharp knock in yesterday's session. So, what is the target one should be looking at if one is invested in this counter?
Nandita, you have rightly pointed out. So out of these two counters, IDFC has a more potential on the upside. From that point of view, I think it is better to stay away from the IDFC First Bank for the time being. But once this merger gets completed, I think it's a good bet from a positional point of view. We need to see post-merger the valuation as well. But as of now, purely from a technical point of view, I think IDFC First Bank has a support near about 72. So there is still potential of further downside towards 76 to 75. So if a view is slightly from a positional point of view, one can stay put for the upside target of 85. And IDFC Limited can be bought at current level for the upside target of 118 to 120. This stock has been in an uptrend and it has a good support near about 105. So if somebody wants to get into the fresh entry, IDFC Limited would be a better choice.
All right, IDFC Limited, a better choice compared to IDFC First Bank. Hope that answers your query. And with that, of course, we've come to the end of the query segment. But Nilesh, before I let you go, what are your stock recommendations for our viewers this morning?
Right. So we are focusing on the buy side. So from the auto space, we are liking Hero MotoCorp. Yesterday, we have seen a big spike in this particular counter and it has given a fresh breakout as well. It has been in an uptrend, but overall from the Nifty auto basket, this has been one of the underperformer as well. So given the fact it has given a fresh breakout, the structure-wise, this particular counter is looking positive for the upside target of 3,090. Stop loss can be placed near about 2,990. The second counter that we are liking is NTPC. Again, similar sort of uptrend was seen here as well. Constantly, we are witnessing a high top and high bottom formation in the NTPC as well. This particular counter looks positive for the upside target of 201. One can keep a stop loss below 190. The third counter that we are liking is from IT space. We spoke about the Nifty IT index. We believe that there could be possibility of a pullback to continue. So to play this pullback, take Tech Mahindra, this particular counter that we are liking. In last 4 consecutive weeks, now we have seen a positive momentum, and we believe that this momentum is likely to continue. On the upside, the target comes around 1190. One can keep a stop loss below 1126.
All right, 3 buy calls on Hero Moto, NTPC as well as Tech Mahindra. With that, Nilesh, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Well, we are completely timed out on this edition of Morning Trade. So, it's a good bye from me and the entire team that put the show together. But don't go anywhere, because coming up next is Opening Bell Speaking.